Welcome guys to Forex Success. So in this video I'll be showing you how you can grow small account. It's very possible to grow small account, whichever size. As you can see right now, this account is $4. A $4 account, how you can trade it. Okay, first thing you need to understand is margin and free margin level. As you can see, we just have the balance, equity, and the free margin right here. So as soon as you place a trade, the margin will be subtracted from your equity. That will give you the free margin, and once that free margin is over, that it's becoming negative sign, then your trade will close out. Okay, this is what you need to understand. Why trading with a small account, for example this $4 account, you should know the trade you should take with lesser margin, with small margin. Those are what you should go for. Exactly. So trade like VIX75 1x, you can go for such trades because the margin is low. So let's say 15-minute time frame, I want to place a buy for VIX75 1x, seeing the 4-hour and the daily time frame. So I want to place a buy for it. What I'll simply do, I'll use the smallest lot size, which is 0.005. This is the smallest lot size. 0.001. 0.005, sorry, to place a buy for volatility 75 1s. And look at it, I placed the buy successfully. You can see it has a very low margin that you can use on small account. That is it. So going back to the trade, you see that it has a small margin and therefore it's counting. Look at it, 0.07. So what I'm letting you know now is that you can still open up to 10 positions, though it will be risky. Yeah, of course, you can open up to 10 positions as far
1x with this lot size has a buying power of 0.03 cents, $0.03. That's what it simply means. So if you are buying 0.0, if you are buying 10 of these trades, it will simply be 10 of this trade will simply be 0.30 lot size. So we're going to try that. We're going to place 10 trades with this. We're going to place 10 trades so that you see how many it can carry. So if you're placing 10 trade, it will be able to move full. For you to just know, you need to take note of this free margin, because the free margin, look at it, the free margin, which is the fourth one, the free margin actually has a role it plays. Once it gets to the negative, it starts closing off your positions automatically. So you have to take note of the free margin to make sure that you have enough free margin to hold your positions, to hold your open positions. And how do you calculate the free margin? You calculate the free margin by subtracting your equity. Your equity minus the margin level will give you the free margin. We'll have 73 here. Equity is 73, and then the margin is 3. So therefore, it gave us free margin to be 4.68. So let's say I'm adding a buy. Like I said I'm going to put 10 buys. Let me add 5 first. You can see even with this small account balance, it's still, like I said, make sure that you have free equity, free margin to hold positions. So me opening 10 lot size, 10 positions with this 0.005 lot size, it's risking this small account. Yeah, it's risking the small account. At least with this lot size, with this few trades I've opened, even as the balance is small, it will be able to hold some pullbacks of the market until it finds explaining everything, the balance, the equity, the margin, the free margin, how it works. But guys, you should always know that the margin is from the asset. Each asset has different margin requirements. Like the margin requirement for this volatility 75 1x index, it's 0.3. That's the minimum lot size, which is 0.05. So if I'm taking a 0.005 5 lot size of this, it will require a $3 as the margin. So that's things you need to know. So then the free margin getting. Yes, guys. So the next video, I'll be showing you how to target certain amounts and certain pips to know how much you gain. Like, for example, you be like, if this price move from here to here, probably on step index, you're able to know that if it moves from this point to this point, you should be able to know how much you will make on it, how much you are making on that trade, or how much you are risking, so that you know where to set your stop loss. Exactly. That is how to calculate pips on synthetic indices. I'll be doing that video. Okay guys, and then you see the trade. You can see the trade we took. Yeah, you can see the trade we took. Look at our entry, which is because we took a buy for boom. Yeah, we took a buy for boom 75 Index. You can see it's still buying. And look at the $4 account. It's now equity of $10. So it is very possible, guys, to grow small account. It is very possible. Just understand the right key you need to use and risk the account. Yeah, know how to risk it wisely. I explained to you the margin level and what the free margin does and how it affects your account. So looking at this trade, I'm still waiting for you to buy more. Of course, I'm still waiting for you to go for a higher for a higher movement to the upside, of course. So that's it, guys. This is how I'll end this video. Thank you, guys, and make sure you hit the red subscribe button for more amazing videos. Yeah, give the video a thumbs up and drop good comments. You can see it's still going to move to the upside. Market came down. Look at it, guys. The market came up, pulled down, then test this place, then moved back to the upside, then came down again for probably a pullback. Then the market moved again. It was giving us higher highs here, higher highs. Then it came down, trying to break this support level, but was unable. It went back for a little pull up to the upside. Then it came down again, then it broke through the support level, but this point hold it back and it's trying to move to the upside again. So the only way I will be closing this trade is if this market is unable to break through this resistance level. That's the way I'll be trading this closing this market, because it definitely means that a reversal is about to occur. So that's it, guys. It is very possible to grow small accounts if you have the right knowledge and use good risk management. Remember, I said we still have enough free margin, which is 4. This free margin 4.56 can open additional 30 trades. Yeah, it can open, no, not up to 30. It can open additional 20 trades for this account, of course, because 5 positions opened 0.15. So therefore, you can open still more, guys. So that's it. And thank you all, guys. If you don't have an account, you can click on the link to open a derivative account. That's when you will find where to trade volatilities. You can see volatility indices, step index, crash and boom. That's the only place you will find where to trade crash and booms on derivative. The link is at the description below. Open an account right there, guys, and start trading. Thank you very much. We'll have a Telegram link at the description. And yeah, guys, you can see we are on profit on the same account. You can see from the $4 we are already on $23. So it's very possible, guys, to grow any account. Of course, it's very possible when you have the right knowledge. You can see we opened the position for crash 1000 index and it's still selling, and also our volatility 75 1s trade, it's still on profit. With the right knowledge, you're going to do anything anything in this market. That's it, guys. So make sure you hit the red subscribe button for more videos. Thank you. And all synthetic indices, which are volatility 75 index, step index, they're out there. So if you're new here, make sure you hit that red subscribe button, turn on the notification bell. Guys, please give this video a thumbs up. We're actually doing well, of course, guys. So if you don't have a derivative account, you can click on the link below to open a derivative account so you can start trading and making money with synthetic indices. It's 24/7. Thank you once again, guys. We love you all.